Welcome to the Explainer. Today, we're diving deep into KPI Technologies. If you've been tracking the mobility tech space, you already know KPI Tech is an absolute heavyweight. But today, we're going to look closely at their strategic pivot. We want to figure out exactly how they're dominating the automotive software space, especially when the broader global auto industry is running into some pretty serious economic headwinds. It's an absolutely fascinating look at business moats and financial realities, so let's just jump right in. Here's our roadmap for this breakdown. First, we'll look at their evolving business moat. Then, we'll dive into the Q4 fundamentals and deal numbers. After that, we'll map out their margin and geographic expansion plans. And finally, we'll wrap up with the impact of AI, acquisitions, and the very real risks on the horizon. Section 1. The evolving business moat. Let's break down the fundamental shift that actually makes KPIT so unique in this ecosystem. Look, to really grasp KPIT's value, you gotta ask yourself, what actually happens when a car becomes a computer on wheels? I mean, think about it. Modern vehicles today are carrying anywhere from 100 to 120 individual computers. They're running over 300 different software features. Everything from the powertrain to your dashboard infotainment has to communicate flawlessly. And honestly, integration has become the single biggest bottleneck in building what the industry calls software-defined vehicles, or SDVs. And boom, right there is where KPIT's moat really emerges. You see, your traditional engineering and research vendors, they usually have a super narrow focus. Maybe they just handle some legacy middleware or one specific testing function. But KPI, they offer an end-to-end chip-to-cloud stack. They cover the whole shebang, the entire vehicle software architecture. We're talking from the initial feature development and integration all the way to cloud connectivity and after-sales services. They are literally the ones solving that massive integration bottleneck we just talked about. Now, the absolute core of their strategic pivot is right here in their revenue mix. Right now, products and solutions make up about 15% of their revenue, with traditional services handling the other 85%. But management, they are aggressively looking to flip the script. They want to push that products and solutions mix up to 60% within the next 3 years. So the big takeaway here is that transitioning from a traditional service model to a highly scalable, high-margin product business is the absolute engine of the KPIT growth story going forward. All right, Section 2, Q4 fundamentals and deals. Let's see how this product-led vision is actually translating into cold, hard numbers. Diving into the fundamental analysis, we're looking at some seriously resilient growth. For Q4, reported revenue came in at almost $185 million US. If we look at constant currency, that's a solid 1.8% sequential growth. Now, EBITDA margins stayed flat at 20.6%, while adjusted profit after tax hit 1,630 million rupees. That is a massive 22.2% jump quarter over quarter. But here's the crucial part. What's actually driving this? It's their commercial vehicle and off-highway segments, which jumped over 11%, perfectly offsetting a slight dip in their passenger car business. But honestly, out of all the members this quarter, this is the one that really steals the show. $349 million. That is their total contract value, the new deal wins for just this quarter. To put that in perspective, we're talking about a mind-blowing 73% jump from the previous quarter and a 25% increase year over year. That kind of deal momentum? It's a huge vote of confidence from clients in KPIT's chip-to-cloud strategy. So where exactly are these massive deals coming from? Let's break down their 13 new clients. Sure, they added 3 global passenger car OEMs, but look at this. They also locked in 4 truck OEMs and 6 off-highway OEMs. This is a brilliant strategic diversification. You know, the passenger car market is going through a bit of a cyclical slump right now, right? By pivoting hard into commercial trucks and off-highway vehicles, sectors with much stronger balance sheets and immediate demand, KPIT is heavily shielding itself from that consumer's cyclicality. Moving on to Section 3, margin and geographic expansion. How exactly does a tech company keep its margins up while pouring money into new tech? Let's find out. Geographically, we're literally watching a massive pivot unfold in real time. European automakers are really struggling right now. They're getting hit from all sides by Chinese competition, tariffs, and high costs. Because of that, KPIT saw a 7.1% sequential revenue drop in Europe. But check out the offset. KPIT went all in on the Asian market and delivered a stellar 25.1% sequential growth there. They are riding a massive wave of momentum from domestic Indian OEMs and global players building India for India products. Now, clients are pushing back on pricing, and upskilling talent isn't cheap. So, to fight that, management has rolled out these 5 structural efficiency levers. A huge move here is that they're aggressively ditching traditional time and materials billing. In fact, over 80% of their new contracts are fixed price or outcome based. Why does that matter? Because when KPT uses AI-infused delivery and their own proprietary tech to finish a job way faster, an outcome-based contract lets them keep all those efficiency gains as pure profit. They aren't just billing for fewer hours anymore. They're getting paid for the result. Right now, they're sitting comfortably at a 20.6% EBITDA margin, and management is guiding for 20.5 to 21.2% in FY27. They're totally fine keeping near-term margins stable, and that's because they're taking over 5% of their revenue and plowing it straight back into R&D. That is way higher than their peers. The real prize we're watching for is their medium-term target, hitting an ambitious 22 to 24% margin. Once that operating leverage really kicks in, fueled by that 60% product mix we talked about, the profitability could be incredible. Okay, Section 4, AI, acquisitions, and risks. Because look, every financial story has 2 sides, and we need to look at the whole picture objectively. So facing reality here, KPIT does have some tangible near-term risks. 2 of their absolute biggest software-defined vehicle programs are wrapping up in the first half of FY27. Management actually admitted that if those programs had kept going, it would have added another 4 to 5% in sequential growth. Add in the global delays in EV spending and ongoing pricing pressure from OEMs, and yeah, the near-term waters look a little choppy. But look at the right side of the ledger. The long-term catalysts are incredibly strong. Management is banking on that massive $349 million deal pipeline, plus a plan to grow their wallet share in top 25 clients from 12% up to almost 20%. That should gradually absorb the impact of those program wrap-ups. And to really bulletproof that long-term moat, they certainly aren't just sitting on their hands. They're making a massive play to acquire a 100% stake in KPIT Technologies, an Israeli cybersecurity firm actually backed by the Volkswagen Group. They're kicking things off with a $10 million initial investment, but the total payout is expected to hit anywhere between 60 and 120 million bucks over time. This isn't just a simple expansion. This is a highly strategic move to bake cybersecurity straight into vehicle platforms right from the ground up, creating these incredibly sticky, licensing-driven revenue streams. So here is the million-dollar question you need to take away from this explainer today. As the legacy auto industry hits a very real cyclical speed bump and near-term programs get delayed, can KPIT's aggressive pivot into a high-margin, product-led tech powerhouse actually bridge the gap? I mean, their exploding deal pipeline in commercial vehicles and smart acquisitions definitely point to a solid blueprint. But their execution over this next transition year, that is going to be the ultimate test. Thank you so much for joining me for this explainer. I really hope this deep dive gave you a much clearer picture of the hard numbers and the massive structural shifts driving KPIT Technologies today.